Instagram teen accounts have automatic protections for what teens see and who can contact them, plus time management tools. And Instagram will continue adding built-in safety features to help create age-appropriate experiences. Learn more about teen accounts and Instagram's ongoing work to protect teens online at instagram.com/teen accounts.
Listen, all you New Yorkers. Excuse me, taxi. Okay, we're looking around.
This is the 77 WABC Minicast.
Welcome back, folks. Hour 3, the Larry Kudlow Show. You can live stream us over the internet. LarryKudlowShow.com, LarryKudlowShow.com. You can hear us all across the country, around the world, throughout the solar system, including the Milky Way. And please join us. Come visit us during the week. Fabulous Fox Business Network. The name of the show is Kudlow, 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't make it at 4, just text your favorite 9-year-old, and she will show you how to DVR the show. It's not hard. We're going to do some stocks, all right? So the market is sort of backing and frothing, and something was off a little bit this past week, but we're still within shouting distance of Dow 50,000 and S&P 500 7,000. And interestingly, we had a little dinner meeting of the Committee to Unleash Prosperity in New York, I don't know, Wednesday or Thursday. But one of the smart investment people was telling me, and I looked at the small caps are outperforming the big caps right now. And small cap banks, medium cap banks are doing very well for the first time in, 20 years. I can't remember what he told me, but it was quite interesting. And before we get to our experts, I'll start off my pal Jason Trennert, all-star investment strategist, and he's very optimistic about the economy. Let's see. What is he saying? There is great frustration. In a meaningful change, the president seems to acknowledge in an interview with Larry Kudlow this week that it's unwise politically to tell people how they should feel. Concerns about how the economy is perceived by the media and the people lead to further attempts to stimulate the economy. But he's basically saying, you know what? Everything is going to be just fine. Not a single element of our bull market top checklist suggests that the broader market is in danger. Earnings growth remains robust. Long-term interest rates are quiescent. Market leadership has broadened beyond the technology sector. Some consolidation in the tech sector was inevitable, and in our opinion, increases the chances that the bull market will continue to run. Right. Jason Trennert, he's all-star investment strategist and a dear friend of mine. Anyway, we got a couple all-stars. We got Jack Bouroudjian, chairman of SmartX Data. We got Jim Lacamp, Senior VP for Investments at Morgan Stanley. Gentlemen, welcome back. Jim Lacamp, you agree with Jason Trennert? I do. What do you think?
Yeah, I do. If you look at historical bull markets, you would typically not find a top when earnings are rising. The Fed is still in a rate-cutting cycle. Productivity is rising with the markets near all-time highs. So that's pretty much a checklist for a healthy market, not an unhealthy market. Not only that, you've got rotation going on. You've got, and you mentioned some of the rotation, but there's a lot of rotation going on. Small caps from taking the lead from large caps. You've got international doing a little better than the U.S., but even in the U.S., you've got rotation, you've got value and energy doing better, and even within technology, you've got rotation with the AI infrastructure stocks still doing very well. Look at Western Digital, Micron, Seagate. They're doing better than the implementation stocks. So all you're seeing right now is a consolidation of leadership, some rotation, but 74% of companies have reported earnings, and the results are very, very good, about 9% right now.
And earnings are the mother's milk of stocks.
Not to mention productivity. Productivity is accelerating not only economically, but within corporations. That's a very healthy thing. And yeah, will there be some displacement of jobs? Probably, but we'll see. There's always that fear with new technologies, but it typically is a fear that gets exaggerated beyond the reality.
Well, anyway, inflation rates are coming down. Employment rates are going up. Wages, Jack Bouroudjian, wages are rising so fast in the January report. It's very interesting. I said this at the beginning of the show. I'll say it again. When you look at the wage income proxy, okay, take a look at the employment report. Average hourly earnings up and hours worked up. You put the two together, the increase for the last 3 months is 5.6%. 5.6% wages for the past 3 months. The inflation rate for the 3 months is 2.4. So you have 3 percentage points increase of wages over inflation. Now, that blows up the affordability arguments that Democrats have been making. But there's so much money around, they can invest it in the stock market, for heaven's sakes.
Well, Larry, what if we say that was, that's just the beginning? Here, and by the way, Jim was spot on with his analysis. But one of the things that I'll point out, and very few people are talking about, is that the market essentially has been doing all this digesting for the last couple of months while we've seen a 50% drawdown in Bitcoin. And had you talked to any of us at the beginning of the year and said, what do you think will happen to the stock market if we see Bitcoin come off from 126,000 down to 60,000? I think you would have seen a universal opinion that we would have seen at least a 20% break in the market. So, and that didn't happen. That's telling me that there's a lot more strength that's hidden underneath this market than we think. Now, one of the things that I will say is that, looking at the yield curve, it tells me that the short end is still way too tight. You've got the 3 month trading at 3.6% and the 10-year hovering right around 4%. That tells you that there's something that's still stifling the economy, and I think it's right there. The president's been pointing it out. And, here's a man who inherited the worst economy since, Reagan inherited that nightmare from Carter. So, he's been doing an amazing job, and I think that the White House should be congratulated for the last few months. Look, what we have experienced from April of last year to today is nothing short of a miracle. I'll say that. I've been in the markets as long as you guys have. I have never seen anything like that. And you know what? And if that's just the beginning, which I think it is, because we're seeing almost like a spring that's being sprung and wound up, between everything that's going to be unleashed this year, we could theoretically see this market double in another couple of years. And I don't think that could be a surprise to people like myself that are pointing out these things right now.
Donald Trump is a very good economist. I don't care. The media may make fun of him, but I can just tell you, and actually the only economists he ever listens to are me and Kevin Hassett. Down through the years, we're the only two he really listens to. But he himself is a very good economist, and he has had a much better predicting career than the vast majority of economists. Now, he wants lower Fed target rates. I hate to call it the Fed funds rate because really we don't have a Fed funds market anymore. It's really the banks. It's really what the Fed pays the banks to park reserves at the Fed because there are no reserve requirements. But let me come back to your point. The 3-month T-bill is 367 to close yesterday. The 10-year note is 405. You're right. 10-year note came down 16 basis points. That's a lot in 1 week. 16 basis points. So the curve is flattening. Why doesn't the Fed? They should be looking at that. If the 10-year rate keeps declining, Jack, that's a signal for the Fed to lower their target rate at the short end.
On, Larry.
It's an old signal. It's a very old signal, but they should be watching that.
This Fed has actually lost all credibility. I think the last time I was on your show, I was describing, Powell as being one of these starting pitchers in the ninth inning with nothing left in the tank. You know what I mean? And that's kind of how I still feel. The problem though is that if we wait too long, he could stifle what's already brewing, and that's what I really worry about.
We got to get him out of there. The clock is ticking. Get him out of there.
Absolutely. And the other thing that this president is doing, and I do want to point this out, is he's creating a Western Hemisphere OPEC. I mean, what he's doing if we get Canada, Mexico, Venezuela, and of course the U.S., which is the largest producer of crude, all lined up, Larry, that changes the dynamic globally like we have never experienced since the beginning of crude production.
Since the beginning of time, going back to Adam and Eve. By the way, oil prices are going to go down. Now they've been rising year to date, but that's because of the Iran business. But the market is oversupplied with oil. We keep pumping it out. We're almost 14 million barrels a day, Jim Lacamp, down in Texas. I got to believe oil price. Trump said he wants, what was his number? His number was $53 a barrel. He may get there. And it's also important that gasoline prices in January fell 3.2%. That's big drop in gasoline prices and energy-related prices. Now, that's going to be very bullish for zero inflation. So how's this, guys? M2 growth, this is almost a dirty word. M2 growth, I'm reading from Scott Granis, Calafia Beach pundits, a smart guy. M2 growth, which was 30% back in 2021 and led to the big inflation. Things come down and it's running around 3%, maybe 3.5%. Very modest M2 growth. So there's no inflation coming from there. So I'm waiting for lower rates. I think you can get a little notch down, Jim Lacamp.
Well, you can, because, and I mentioned productivity before, but there's also deregulation.
Yep.
And deregulation will bring prices down as well. There's a lot of disinflation going on right now, and that's a good thing. That's going to give the Fed a lot more leeway. I think the Fed does have leeway. You look at the Fed funds futures, though, they haven't moved much. They're still suggesting no cut until June, and that's probably true because Powell probably won't cut in April. But
he ought to cut in March. He ought to cut right now. Now.
And he has room to do it, especially with the CPI number that was out this week. And again, I can't emphasize enough how much the productivity in the economy is also seeping in. And the other thing is that we haven't really talked too much about is consumer incomes are rising faster than the inflation rate. So that's another thing that suggests that inflation is not a real problem right now. And I do think these energy prices will come down. Production is going full steam ahead. I think, again, I agree with you. Once you get Iran settled down a little bit, you've got Venezuela likely adding to the supply picture around the globe. I think prices will come down. And the energy sector has been the hottest sector of the year so far. It's probably a little overdone here.
That's a false dawn.
Because of that.
That's a false dawn is what that is. I was at this conference. I mentioned it earlier in the show. The Committee to Unleash Prosperity had a dinner this past week, and so a bunch of us spoke at it. But James Freeman is a Wall Street Journal editorial writer. He writes something every day, and he's a very smart guy. Parents are old friends of mine, movie or TV producers. Anyway, James Freeman, we had to go around the horn. What's the forecast? James Freeman said that the CPI is going to be less than 1% over the next year. And I agree with that. Less than 1% CPI, 12-month change. I love that. And then,
well, you're talking about a heck of a bond rally if that happens.
And stocks. Everything.
And that bleeds into stocks. And it also changes the kinds of stocks that we're going to buy. And that really bodes well for the market, because if you see a big rally in the dividend-related stocks, which haven't moved in a long time, that's more participation in the market, and that's healthy because you've got a better breadth picture.
So they asked me, Jack Bouroudjian, about economic growth. I said it's going to be 15%. I'm with Trump. Trump told me 15% in my interview, but he didn't say how long. It could be 3 years. But 15%.
Larry, all you have to do is take a look at the supply chains. If you're trying to buy a generator, a backup generator for a data center that you're building, you're out of luck. They're not available. You have to wait 2 years. There is so much CapEx taking place right now. Yes. So much in the pipeline. This is going to explode. That is why I am so bullish. That's why I see this thing on the horizon, and I want to make sure that we take advantage of it.
No, it's 100% depreciation. Year one, capital goods boom is producing more productivity. It's producing higher wages but lower unit labor costs. I got to take a break. Producers are screaming at me. We're talking to Jack Bouroudjian of SmartX Data, Jim Lacamp of Morgan Stanley. I'm Kudlow. We'll be right back. Jack Bouroudjian, SmartX Data, Jim Lacamp, Morgan Stanley. Gentlemen, we had so much fun in the first segment. We've only got 2 minutes, so split it evenly. Jim Lacamp, what do you like?
Home builders, we could probably start nibbling again at some of the commodity natural resources areas now that they have sold off, and the travel stocks are still, if you're a momentum player, those are the areas to be in.
Jack Bouroudjian, there's a factory boom going on. How about construction-related stuff?
Yeah, you're right in my mind, Larry. That's where I'm looking to put my money. That's between that, anybody who's building a data center right now, anybody that's supplying a data center, that's where you want to be. People that are putting the optics in there, the fiber in there, the backup generator. Everybody in that world right now has got supply books that are filled.
30 seconds, Jim Lacamp. How about banks? How about smaller and medium banks?
Yeah, I think that curve is going to steepen some more, and that group, the regional banks, has been pretty strong. A lot of good charts there. I think you can absolutely nibble in these areas.
Jack Bouroudjian, bond rates may come down, but I'd rather own stocks.
Well, I think stocks are going to give you a much better return over the course of the next couple of years than bonds because of what we've been talking about for the last half hour here.
I mean, that's really a key point. Inflation rates coming down. It's got to help the stock market. How about precious metals? Go ahead, real fast, fellas. Precious metals.
Gold could break $1,000 overnight. That's the one thing that worries me. And remember what happened in those early days of Reagan.
I think there's more consolidation to happen there. I do like the industrial-related ones like copper and silver.
Yeah, copper and silver. Much more constructive. All right, fellas. You're terrific stuff. If you had a decent host, we would have had more time in the second segment, but alas. Jack Bouroudjian and Jim Lacamp, I appreciate it very much. Folks, stick around. Money Politics coming up with Liz Peek and Steve Moore. I'm Kudlow. We'll be right back.